Hey everyone, it's Ben Hardy here, and dang nabbit, the Federal Reserve has done it again. They have decided to continue to increase rates. Before we get into this video though, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you want to see more videos just like this, then I recommend you subscribe because I post content every single day. Let's get into it. So like I said at the beginning of the video, the Federal Reserve just increased rates yet again. And so we're basically at 5% at this point with a federal funds rate, which means that lending across the board is going to get more expensive for consumers. Well, kind of, because what we actually saw over the last couple of months was pretty interesting. Rates actually peaked, at least for auto loan rates, in March, and then they slightly went down in April. And well, we just had this rate hike at the beginning of May, and so we'll see where rates end up being at during this sales month. But I'm sure they're going to be higher than April. Will it be as high as March? We'll just have to see. But this is obviously going to put a huge damper on overall affordability and sales within the car market. So first off, with the used car market, if you've been following the channel, then you know that the used car market's in a very strange place because supply is really low, but prices are actually declining at the same time that supply is low. And the reason why this is happening is because the supply that is out there is not really all that appealing for buyers. And then on top of that, there are enough people that finance their used car purchase. It's about half of people buying a used car that'll finance it. That puts the used car market in a situation where affordability is really tough. I mean, the average interest rate for a used car is in the 13 to 14% range at this point. I mean, that is so expensive. I mean, just pull open a finance calculator and just throw in any used car and throw in 13, 14%, and you'll see the payment, and you'll probably throw up a little bit in your mouth. And so between a lack of supply and a supply that's not all that great and affordability, the used car market is going to continue to decline as time goes on, and this rate increase is definitely not going to help out with that situation, which I think frankly could be a positive thing because used car prices are so much higher today compared to what they were like prior to the pandemic. And so this could finally help the used car market get into a more normal price range. When it comes to the new car market, it's going to be a little bit different. And the reason why it's going to be a little bit different is, first off, new car rates are significantly lower than used car rates. And so like right now, the average new car rate's roughly in that like 7 to 8% range. So like 6% less than what you're seeing with used cars. So that actually helps out with affordability. And then on top of that, you have a lot of new car automakers that are starting to release more cemented rates where they'll be like, hey, we'll give you 2.99 if you finance through our captive lending institution, right? And so this whole rate hike is going to definitely, dampen some affordability with the new car market, but it's not going to be nearly as impactful as what you have on the used car market, at least on the surface. But when you dive a little bit deeper, what you see is that, well, this interest rate increase is going to cause more job losses. At least that's what all the reports say, is that this will surely cause more people to lose their jobs because businesses, right, since they'll have to pay more for everything because interest rates are higher, are going to have to lay off more employees, which means you're going to have less people, right, working in the economy. And a lot of these reports also state that this dramatically increases the risk of recession either in this year or in next year. And well, if you have recession, then that is like the perfect recipe for the new car market and frankly the used car market that we just talked about to take a big poop, right? Where nobody's going to want to buy cars unless there are enormous discounts, which that's something that we definitely could see. I mean, we're already starting to see bigger dealer discounts. It depends on the brand, right? And then we're also starting to see bigger manufacturer discounts as well. And so again, with this rate increase, this is surely going to increase the rate of discounts that we see from automakers if they want to continue to sell cars. Now, with all of that being said, the most fascinating part about this whole rate hike situation is not actually the rate hike itself, but the posturing from the Federal Reserve, because it looks like moving forward, they're going to basically halt future rate hikes, at least for the time being. So what they basically said is that, yeah, they're obviously going to keep looking at the economy and see what happens, and if they have to continue to raise rates, they'll continue to raise rates, but they're most likely just going to pause things over the course of the summer. They're just going to let the economy do what it's going to do over the summer, and then they're going to, act after that. And I think this is because the Federal Reserve assumes that things are going to really slow down over the summer, and then they're potentially going to have to like pull back a little bit, you know, once fall comes around. Again, that's just my personal guess based on the research that I have done. But it's pretty interesting, because if that is what happens, then this is going to give everyone, right, the car markets, the greater economy and individuals, to kind of settle into this new higher rate environment. Now, that doesn't mean that people aren't going to get hurt, because, well, you're going to have plenty of people going in and trying to buy cars, and they're not going to be able to get approved because the rates are too high, right? They won't be able to afford the payments. And then on top of that, right, if we keep seeing more and more bank failures and just a complete reorganization of the whole banking system, I mean, who knows what that is going to do to the car industry. I think it's way too soon to tell, but what it looks like is happening right now is that credit is just tightening, right? Lending institutions are becoming a lot more picky with who they're willing to give loans to. And on top of that, like, they're not really giving people deals like they used to. Again, there are definitely examples out there where there are some deals to be had, but it's just interesting what's happening with the whole situation. And so we'll have to see what happens over the course of the summer. In terms of my guess as to what's going to happen, I think what we're going to see is what we've already been seeing. A continuation of the buildup of new car inventory that we've been seeing. The used car inventory is not going to build up because, well, you don't have enough people buying new cars and trading in their used cars for new cars to really help bulk up those used car inventories. And so I think we're just going to continue to see less demand with both markets, and so pricing on both markets is going to continue to drop, but it's going to be like a opposite effect where the used car market is going to see fewer and fewer supply, whereas the new car market is going to see more and more supply. And so chances are we're going to see bigger discounts on new cars than we are on used cars. And so it'll be interesting to see what happens over the course of the summer, but just get ready for those commercials that are like big summer blowout, right? The big summer deals, all that fun stuff. Let me know what you guys think is going to happen moving forward, and let me know if you think this is a good idea to just kind of pause things over the course of the summer to see what's happening with the economy. I'll see ya.